Well, good morning, and here we go. It is Friday, May 13th, and I am very happy that the weekend is here. Here I am with my Dunkin' Donuts coffee. I've only had one so far, so I got a couple more coming. But what is it that we need to know? I'm Kenny Polcari, your host of the party, and here is what you need to know. PPI, the Producer Price Index, is suggesting that inflation remains persistent, isn't in fact not peaking. It's mimicking what we learned from the CPI. JJ finally confessing that he cannot guarantee a soft landing. And why is anyone surprised? Stocks continue to come under pressure as investors continue to price in a worst case scenario, but that's changed today. And what are we having for dinner tonight? Well, guess what? The market needs to be regulated. So I'm giving you Bran Muffins for Saturday morning breakfast. They are so delicious and reminds me of being a kid at Cape Cod. Okay, look, savagely, violent, punishingly, hard, uncomfortable. These are all words that describe brutal. And if you've been watching, brutal is exactly what's going on in the markets. Stocks continue to get slammed, by the way, in both directions, as big oversold names trade up violently and then they trade right back down just as violently. By the end of the day yesterday, the Dow lost 104 points. The S&P gave up 5. The Nasdaq turned positive late in the day and gained 6 points, while the Russell added 22 points and the transports tacked on 30 points. Nothing dramatic, but they were intraday swings all day. Investors continue to get hit upside the head, and the algos just go into sell mode. Buyers, of which there are plenty, taking a step back, choosing not to pay the inline prices for shares that they can buy cheaper, as the algos arbitrarily hit bids in what is known as a time-weighted concert of selling, right? That's called a TWAP, a time-weighted average price. And it's different from a VWAP, which is a volume-weighted average price. And so let me just tell you about that really quick so you have a sense of how the algos act and why they react. A TWAP, time-weighted average price, allows the seller or a buyer to take an order, divide it by the number of minutes and sometimes seconds that you want to execute it during the day, and then they just execute it. So you can put up some guardrails, you can put a floor on the order, just if you're a seller, put a floor on the order just in case someone has a fat finger that causes the stock to plunge in error. You wouldn't want to go along necessarily at erroneous prices. So yes, you can protect yourself sometimes on the downside, but in any case, what you need to understand is how a TWAP order works, right? Because it is about time, not price. So for example, you're an asset manager, right? You're not you as in a retail, but you're an asset manager managing millions and billions of dollars. And you need to sell 5 million shares of Apple, which is equivalent to $725 million order. And you want to do it over the 6.5 hours of the trading day. Apple normally trades upwards of 130 million shares a day. So 5 million shares represents almost 4% of that volume. Now, there's 6.5 hours in the regular trading session. So that's 390 minutes or 23,400 seconds in the day. Which means if you want to sell 5 million shares of Apple over the day, then you need to sell 12,820 shares every minute or 3 shares every second, right? You enter the order into your algorithm, you hit the send button, and bang, the algorithm takes control. No humans, no talking, no reflection, just execution. And with every sale, your order gets updated so you know exactly how much you sold, at what average price, and you know what you have left for sale, right? So you're up to date, you know what you're doing, but it just happens without you, right? Once you hit the send button, it just goes. So if you're a portfolio manager that has a busy day, you got meetings and all that stuff, and you can't be bothered with this execution. I mean, it's Apple. It's a $2 trillion market cap company. You enter this as a TWAP and then you're done. Simple, right? No worries. I mean, how bad can it be? In the end, when Apple trades 130 million shares a day, your 5 million shares is really a pimple in the big scheme of things. Now, imagine all of the asset managers out there. Imagine all of the traders out there. Imagine everyone using this technology to represent their interests and their executions. It all happens so fast, and with prices in sub-decimals now and more than 50 trading venues, volatility increases, dramatic moves increase, and the markets react haphazardly. You have algos fighting with algos, which is why you see the action that we see. Toss in weakening macro data points, rising inflation, wages that aren't keeping up with inflation, changing and unclear Fed policy, an ongoing war in Ukraine that is only exacerbating global inflation while resulting in the complete destruction of a country. Add in the lockdowns in China that only further disrupt the supply chain, and you have a trading environment that becomes brutal. And then investors price in the worst case scenario in a classic shoot first, ask questions later type of trade and mentality, because that's always the way it works, right? You always shoot first and then you go back and try to fix it. Now, so S&P 3800 is now clearly in sight, and it was in sight yesterday. We traded as low as 38.58, leaving the S&P on the cusp of a bear market. The concern now is how will the algos and investors react if we go there? Will buyers defend that position, or will the algos go into a frenzied sell mode as another technical breach ignites a wave of sell orders, pushing prices lower, sending the index further into the abyss? What will the Fed do then? Will they suddenly become dovish? Will they cut rates to protect markets from collapsing? Or will they continue down this path to combat inflation? Will GDP come in negative for the second quarter of 2022? Because if it does, then say hello to a recession. A recession that wasn't supposed to come, if at all, until the spring of 2023. So how's that working for you? Now, something very interesting happened on the way to the forum yesterday. Speaking of a recession, JJ has finally come to terms with what it is. Apparently, his confirmation by the Senate yesterday is now allowing him to stop lying, just telling the truth. And that's what he did yesterday, telling us that he cannot guarantee a soft landing and that we should get ready for some economic pain. Oh my God. Now, to be clear, his idea of a soft landing would be getting inflation back to under 2%. It's currently running at 8.5% if you look at the CPI and 11% if you look at PPI. And he wants to keep the labor market strong during this whole process. Now, if the Fed remains as aggressive as they suggest, pushing rates up, avoiding a recession will be a challenge. And bingo, there it is. Don't we all feel better now? In addition, he also admitted that they should have begun raising rates sooner. Are you kidding me? Are you kidding me? So now we can all prepare for this coming recession, something that we all knew. It's just how bad now will it be? And what that's going to do today anyway is allow the markets to breathe. Because he's pulled back the curtain, he's offered up some clarity about what we can now expect. Futures are higher, right? Recall that he maintained all along that a recession can be avoided. No need to worry, we got this. But many investors, the sellers in this case, weren't buying that narrative. And stocks hit the skids. And now, I think after Senate confirmation and a guarantee that he has 4 more years on this job, suddenly he admits what the markets have been telling him and us all along. Anyway, this morning U.S. futures are higher. So think of that as a relief rally as the S&P kissed the bear market yesterday, looking for a bottom. And while it feels good right now, there's been a lot of internal damage done to the markets. There has to be a capitulation day at some point, right? A day when it looks like the world's about to end, a day when they start throwing everything out the window. You're going to need that in order to really, really flush this out. So you got to stay awake, because he just told us that he cannot engineer a soft landing, which means we have to consider what type of a crash landing are we headed for? And that's going to start to play out over the course of the next couple of weeks, and we'll see that in market action. This morning, Dow futures are up 240 points. The S&P's up 45, NASDAQ up 210, and the Russell up 17. Again, think relief. Now, in his statement yesterday, he also assured us that the 50 basis point moves are the move. He's pushing back really hard on those that suggest we need a 75 basis point move, and that is helping the tone this morning the same way it did 2 weeks ago, Wednesday, when he gave out that news after the press meeting, right? My guess is that today's euphoria is transitory as we move further through May and into June. And the recent meltdown in the crypto markets has not been helping the broader tone of the overall market. The complete collapse in stablecoin Luna, causing all kinds of panic in those markets. Bitcoin, Ethereum, and other cryptos taking it on the chin as investors bail. Coinbase's admission that investor accounts would not be protected if Coinbase filed for bankruptcy didn't help the situation as well. You can be sure that investors are going to be closing their accounts. I mean, why wouldn't you? Why would you wait for them to potentially go belly up and then lose your investment? Right? Now that you know this is their narrative. They've already told you, you're not protected if we go belly up. So I can't imagine why anybody's going to stay. I can't even imagine that statement actually came out of their mouth, but that's a whole nother conversation. And Twitter, guess what? Lonnie does it again, taking to the social media platform to say that the deal is now on hold until they can confirm details that the spam fake accounts represent less than 5% of the users, which I think is baloney because I think it's much more than that. And the stock sells off 17% or $8 a share, now trading at $37 a share in the pre-market. CNBC suggesting that the deal is dead and Andy Ross Sorkin becoming hysterical on camera. Makes you want to burst out laughing, right? Does anyone really think that Lonnie's out? Maybe this is a renegotiating point on price, but out? No way. He's come too far down this road to just walk away. But there's always the risk, which is why they call this risk arbitrage. European markets this morning are higher, partly on an oversold bounce, and partly on the fact that JJ's admitted that managing the economy is going to be harder than he's let on, right? It's clarity. On the geopolitical front, all eyes remain on Putin and what his response is going to be after Finland suggested they must apply for NATO membership without delay. Putin suggesting that they will be hell to pay if that happens. On the economic side, French inflation came out this morning. It's running at 5.4% in April. And as of 7 o'clock this morning, all markets across the European region are up about 1.5%. 10-year treasuries this morning are yielding 2.9%, up from yesterday's close. If the tone remains upbeat today, which it feels like it is right now, I would expect treasury prices to come down and yields to go back up as money moves out of treasuries back into stocks, right? Even if it's a little bit. So just keep your eyes on that. The VIX, which is the fear index, is also now trading lower, right? This morning it's down a little over $1 at $30.72. Now it's well below that 40 level that many analysts have identified the level that it would ignite more of a capitulation in the market. So we're moving away from that, which puts the capitulation story kind of on hold. U.S. futures are pointing higher at the open, so you can look for the VIX to back off and capitulation to be pushed to another day. The S&P ended the day at 3830 after testing as low as 3858, taking it down 19.92% from the January high. 3800 has been a level that many strategists are targeting, right? Now, it's not really a level of support. So if we get there and fail to hold, then expect the algos to go into a frenzied sell move again, and that could see the S&P trade down, like I said yesterday, to 3550-ish, 3600 range. I would also expect at that point that the Fed is going to try to calm the markets by becoming more dovish once again. Look, hold the cash and be patient. That's okay, right? And again, while you may feel you have to do something, doing nothing and holding cash is doing something. So just sit back and relax. If you're invested, you're participating. If the market rallies today, you're going along. Don't worry about it. In the end, investors need to prepare for more turbulence ahead. I keep saying that because stocks are going to continue to thrash around until valuations get more attractive or actually price in the risk. The fact that JJ now admits that we should prepare for a hard landing now offers clarity, but it's going to continue to cause investors to have to price in what that risk is, right? How deep is this recession that he's potentially talking about? That'll be the next question. And while stocks are starting to look attractive for long-term buyers, the risk to the downside is still very real. Don't kid yourself, which is why I'm saying you can sit in cash because you'll get an opportunity. No need to worry. Okay, so what do we have for dinner tonight? It's not really dinner. This is really Saturday morning breakfast. And I just thought it was cute, right? Bran Muffins, because they got to help you regulate, and the markets feel like they need to be regulated, right? So we'll offer a little bit of fiber to help that happen. This is the classic Kellogg's recipe that you can find on the side of the Bran cereal box, if you can even find the Bran cereal. It's also a muffin that my Aunt Margaret used to make for us when we were kids every Saturday morning during the summers at the beach. It's such a great memory for me. And since the market feels like it has an upset stomach today, or has been over the last couple of weeks, let's try to regulate it. Okay, so these are really great. You make them Saturday morning breakfast, oh my God. Okay, so for this you need, and again, this is very specific, 1.5 cups of flour, 2 teaspoons of baking powder, 1/4 cup of sugar, 1/4 teaspoon of salt, 2 cups of Kellogg's All Bran, 1 1/4 cup of whole milk, 1 beaten egg, 1/4 cup of vegetable oil, raisins if you want. You can also add bananas and walnuts. I put nothing, just the Bran muffin, but you can add all that other stuff. You want to preheat your oven to 400 degrees to get it ready for when you need it. Combine all the dry ingredients, set it aside. In a large mixing bowl, you want to take the Bran cereal, add the milk, and let it sit for a couple of minutes so the Bran cereal softens up, right? Then you want to add the egg and you want to add the oil and mix it well. Now, Slowly take the dry ingredients and add it to the bowl, stirring and mixing it so that it all combines nicely, right? Until you get done dumping all the dry ingredients, mix it well. Now, take your muffin pan. You've greased all the muffin pans with either vegetable oil or the baking powder spray, whatever. Using a tablespoon, fill the muffin pans, right? Bang it on the counter after you film to remove any air pockets, and then place it in the oven and bake it for 15 or 20 minutes. They cook very quickly. On a 400-degree oven, put it right in the middle. You want to serve these immediately when they come out of the oven. They're so nice and warm. Have plenty of butter on the kitchen table, and you gotta have a big glass of ice-cold milk. There is nothing better than hot Bran muffins with butter and a big glass of ice-cold milk. It takes me back to being a 10-year-old on Cape Cod. In any event, it's going to be another nice day outside here in South Florida. The weather is gorgeous, and we'll see what happens to the market. It is Friday the 13th, and the markets are looking higher. Until Monday, take good care.